space, you start to see other people making more money than you. You see them making 100x on a meme coin or 1,000x. They start showing their P&Ls on Twitter, and you start to feel like you're just not getting it right. You know, you're holding in Bitcoin, Ethereum, and Solana has only gone up 250% in the last year, and it's just not good enough. You've got to stop thoughts like that. That FOMO will force you to buy stuff you shouldn't buy. You will go too far out of the risk curve, and you will end up caught as the tide goes out, and you will lose the money. And if you lose your money, you lose the ability to participate in the megatrend. Rule number one, don't lose control of your tokens.
Solana's native token, SOL, saw an impressive 22% rally after testing the $180 support on February 3rd. However, despite rallying to $215, Solana remains 27% below its all-time high from January 19th. This slowdown impacted trader sentiment, as indicated by the Solana futures market, where a key sentiment indicator fell below the neutral threshold. Monthly Solana futures contracts typically trade at a premium to spot prices, reflecting the additional risk taken by sellers due to the extended settlement period. Under neutral market conditions, this annualized premium ranges between 5 and 10%. A reading below this threshold suggests weakening demand for long positions. At first glance, the current discount on futures contracts might indicate that professional traders are skeptical about Solana's bullish momentum. According to Raoul Pal, holding Solana and Bitcoin allows you to make millions. But before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
The global debasement of currency is happening at about 8% a year. And plus you've got about 3% global inflation. Your hurdle rate to your wealth is 11% a year. Now your wages aren't going up 11% a year, therefore you are getting poorer. And what we're finding is the cohort of younger people, particularly, have realized, unlike my generation, I could buy a property at 3 times earnings. That doesn't exist anymore. It's 10 times, and in Australia, it's even higher. What we found is there was one supermassive black hole that really helped us enormously, and it happened to be Bitcoin, or cryptocurrency at large. But let's use Bitcoin. So Bitcoin actually is the fastest, best performing asset in all recorded history. And we have, I think it compounds at about 150% returns since 2012. That includes 3 70% plus drawdowns. So what we've got is kind of a super creature of investing. If you look at solar and the efficiency of solar and battery technology, these are absolute exponential. They're probably some of the strongest exponentials we see in the world today. That will continue over time. We add in nuclear, we add in decentralized grids as opposed to these large centralized grids we have, and the price of electricity will collapse to a marginal cost of 0 over time. So then we've got output from the AI and the robots and energy costs going like this. And what happens is you get this economic growth that goes wild. We don't know who it accrues to, but then once you start putting in this super intelligence, well, what does it mean for financial markets? How do you invest in anything when something is a smarter investor? It can see the patterns we can't see. It knows everything. So I kind of figure out we've got 5 or 6 years to solve the issue that we don't know what even the study of economics means in the future, what financial markets are, what assets are, what businesses are. So it's the period we need to really focus on wealth accumulation and to try and make as much money as possible.
The cryptocurrency market is in full swing as Bitcoin stabilizes and altcoins surge, marking what many are calling altcoin season. While Bitcoin remains a key player, Paul notes that altcoins with strong communities are seeing notable growth. Bitcoin's price is hovering below $102,000, frustrating investors who had hoped it would rise further. Despite a 38% surge over the past month, analysts warn that prolonged consolidation could push prices lower. Paul acknowledges these risks, but emphasizes Bitcoin's resilience and highlights continued interest from institutional players. Firms like MicroStrategy and Marathon Digital continue to buy large amounts of Bitcoin, underscoring its role as a market staple. On the other hand, Ethereum has recently outperformed Bitcoin with its market cap steadily increasing. However, Paul is cautious about altcoin volatility. Meme coins like Dogecoin and Bonk have gained attention, fueled by their passionate communities. However, Paul is cautious about their long-term potential. He explains that these cryptocurrencies often thrive on hype rather than substance. With price spikes that can quickly reverse, for those who want to get in on the altcoin frenzy, Paul recommends a balanced approach. He suggests investing the majority of your funds in more established tokens like Ethereum and Bitcoin, while using a smaller portion to experiment with riskier assets like meme coins. This strategy allows investors to gain exposure to potential gains without risking their entire investment. Raoul Pal shares some recommendations to ride out crypto crashes. This cycle could still show its brutality to Bitcoin bulls, Paul says. Crypto traders should prepare for frequent 35% pullbacks on the way to the new all-time high. Paul shared a similar warning. That said, since Bitcoin hit a high of $109,500 in January, the community should be prepared for the Bitcoin price to collapse to $70,000, as per Raoul Pal's prediction. He further advised traders not to fall into the fear of missing out and avoid experimenting with leverage and contract trading. The portfolio should be diversified between 3 to 5 assets at most to allow the owner to stay focused on all opportunities and risks. Self-custodial wallets and even multi-signature cryptocurrency storage solutions with good hygiene should be the top priority for traders in volatile markets. Overall, traders should better focus on preserving their wealth during these times. Taking a step back and reducing the noise could be a smart bet. At the same time, one should also consider exploring buying on the dip options. Paul issued a stark warning about rapid transformations in the global economy driven by unprecedented technological advances. Paul, who has long advocated for understanding what he calls the exponential era, says the next few years will bring the biggest changes humanity has ever seen due to the rapid development of artificial intelligence and robotics. According to Paul, we are approaching what he calls the economic singularity, a point beyond which current economic, business, and market frameworks will no longer be applicable. By 2030, things will become incomprehensible using current frameworks of economics, financial analysis, markets, and that sort of thing. AI and robotics are advancing at a pace that will soon outstrip the human ability to adapt to current economic systems. Falling birth rates and aging populations in developed countries are causing traditional economic drivers of GDP growth to decline. He believes that AI will reach and surpass human intelligence levels in all areas of knowledge, fundamentally changing the landscape of work and productivity. Paul is particularly optimistic about the transformative power of blockchain technology and cryptocurrencies in this context. He describes a future economic model where AI agents autonomously perform tasks and transactions using cryptocurrencies, given their ability to operate independently of traditional banking systems. We will likely need cryptocurrency payments to pay, and we will use cryptocurrency to do so because AI cannot open a bank account. It will never transfer money via SWIFT. It will never happen. Paul urges recognition of the urgency of investing in cryptocurrencies. He says the window to capitalize on these technologies is closing rapidly, and there are only about 6 years left to make substantial gains before traditional economic and market structures are irreversibly transformed.